Glad you're with us. Joining me now, I've got Drew Zimmerman live from the trading desk at PI Financial. Drew, I mean, I just love the level of volatility. You guys who are not playing it, you are investing, trading on this basis. You know, I mean, you saw the post-Brexit moves. I mean, it's been incredible.
Exactly, Mike, and it hasn't stopped. We've had huge moves as everybody rushed for safety post-Brexit. And this week, I think we may have seen a turn in that. We had the Japanese yen fall almost 5% this week alone on the back of Abe winning an election. And the last time he did that, the yen dropped 25% within a year. But it's more than that right now.
You know, it's interesting. Of all the moves that were post-Brexit, I mean, we clearly stated on this show, you know, the pound would go down, the euro is going to be under pressure, and I think continue for years. U.S. dollar beneficiary, safe haven bonds like Germany, Switzerland, you know, the U.S. would all do well. I did not see that sharp rise in the immediate aftermath of the yen. I mean, it went way further than I thought it would.
Exactly. It got the flight to safety that a lot of the bonds got, gold got, that sort of thing. But this last week, we had a weekly key reversal lower in both the U.S. long bond and the gold market at the same time that the Japanese yen was dropping 5%. So what does that tell us? That tells us that the market may have got too emotional and pushed these safety assets too far in the 2 weeks after the Brexit vote. And now we may be going back the other way.
Just very quickly translating that for people. So what you're saying is that maybe we've seen the low in the yield, the high in the price. But, you know, like, so U.S. long bonds, off the top of my head, went to about 1.3% in the 10 years. So you're saying that's probably the low for the year on that one.
Exactly. I think we may have seen the low yield for the year. That's a bold statement, especially given the events that were going on Friday and continue here today. But at the same time, I do think the emotions just got pushed too far. This last week, we had a good string of U.S. data. We got data out of China that proved they were stable at the very least. And I think we can move higher.
I'm talking with Drew Zimmerman, PI Financial, does investments and commodity future advisor on that. Drew, just very, very quickly, I want to come back to gold. You're saying that it had a weekly reversal. Just tell me what you see coming in the next short while.
With gold, we've got a huge position risk. That is, we've had a huge buildup in the last 6 months of everybody getting into gold. We've seen it in the ETFs. We've seen it in the COMEX market. And what that means is there's not a lot of new marginal buyers that can come into a market. So that's where we worry about some downside price risk. And when you see a weekly key reversal, that's a strong technical indication that we may have a little rollover. You know, I'm not saying we're going to the lows, but I'm looking for a pullback in the price.
Great stuff. Drew Zimmerman works at PI Financial in Vancouver. Thanks, Drew. Appreciate it.
Thanks for having me on, Mike.